few cases for the scrutiny for this year. So having issued the danger bells, we should be ready for taking it, embrace it. So get ready for not getting into the loop of scrutiny, or even if the scrutiny comes, we should be well prepared for coming out comfortably. Fine. Coming to the other thing like common filing errors, that also we will try to understand. And besides, we'll also have a look at tax audit report recent changes issued in the month of July 2025. Okay, and ITRU is another thing you are all aware, but also we'll have a look at it because last chance as deathbed of opportunity kind of a thing. So last option to file the ITR income tax return, though you missed your regular belated return due dates. Okay, and yes, going back to the next slide, there is ITR forms. So popularly we have these 7 forms for so long, since several years, but shifting the buckets from here and there. So one bucket gets shifted from ITR 1 to 2, 2 to 3, 3 to 4. It's a jugglery, but anyway, we need to face it. So anyway, our softwares are giving an opportunity. So coming to the ITR forms, we have ITR 1. So basic ITR 1 form where it has its own limitations, like where the income is less than or equal to 50 lakhs and very few incomes, salaries, other sources. And besides, recently we have one more income got added, that is capital gains on listed shares. So if you got long-term capital gains on listed shares, that too within 1.25 lakh gain, because that is the limit which is exempted as per the Income Tax Act. If your gain from the listed shares capital gains is less than 1.25 lakh, you can very well opt for ITR 1 comfortably, provided your entire gross total income is below 50 lakh rupee. And ITR 2 form is a bit step up, adding few more incomes like full-fledged capital gains, other sources, and house properties, irrespective of the number of house properties, and also the foreign assets. Okay, but except here the catch is you should not have PGBP for selecting this particular ITR. Profits and gains from business or profession. So you should not have the business or profession for taking this particular ITR. If you are having a business or profession, you have to look up to ITR 3 and 4 only. If you are a small time businessman or a small professional, then you can go ahead with ITR 4, which has presumptive taxation. Hope you are aware what exactly is the presumptive taxation. Like presumed income, presumed percentage on the turnover, presumed percentage, like a prefixed percentage applied on the turnover. You can consider filing ITR 4, but there is a catch again. The income should be less than 50 lakhs. So an individual who has all the incomes, like he has the liberty to go ahead with entire things, then he can opt for ITR 3 comfortably. But anyway, choosing the ITR again is a tactical thing. Make sure you choose the correct ITR. Okay. So that's also another important thing in the process of filing the income tax returns. Coming to the ITR 4 above, like ITR 5, 6, 7, those are for the organizations level. ITR 5 is for the firms, LLPs and all. ITR 6 is for the companies. Again, even a company has, say, got registration under Section 12, like has income or claiming exemption under Section 11 of the Income Tax Act, then they have to go ahead with the ITR 7 rather than ITR 6. Hope you are aware, even companies also can claim the exemption under Section 11 of the Income Tax Act. Fine. So now moving ahead, we'll try to understand the cases of the compulsory filing. We get a doubt. What is compulsory filing? So because a mandatory filing. So where, let me tell you, if your income is more than the basic exemption limit, you are supposed to file the return of income. Everybody knows that. And the firms and LLPs or companies don't have any option. They have to mandatorily file the income tax return. But the individuals are only having some option, like if your income is below the taxable limit. But now the 7th proviso to the class B of section 139 subsection 1 says you have to mandatorily file the return of income if you have the following conditions. Any of the following conditions, if you satisfy, you are supposed to mandatorily file the income tax return. You cannot miss it. So at a later point of time, you cannot say that, sir, I don't have income, that's why I did not file the return of income. Definitely not, because any of the thing which you like satisfied. For example, you deposited, say, 100 lakh rupee, say 1 crore rupee in any current accounts. In all the current accounts, you maintain with a bank or cooperative bank. Then you are supposed to file the return of income, though your income is below the exemption limit, or else you incurred some foreign travel. So you keep traveling in foreign countries, but you say, I don't have any income exceeding the exemption limit. You don't have any option, though you don't have income exceeding the basic exemption limit. You are supposed to file the return of income because your spending in the foreign countries on travel is more than 2 lakh rupee. Or even electricity, sir, is a basic thing. So if your electricity bill throughout the year, constant throughout their expenditure is more than 1 lakh, then you are supposed to file the income tax return. So this is, if you see the mandatory filing as per section 139(1) clause B, the seventh proviso has given three cases of mandatory filing. Besides, it has given some power to the CBDT, Central Board for Direct Taxes, that you can also have your say, because Income Tax Act means it's prepared in the Parliament by our legislators. So the legislators, they have given three conditions, and they have given a freedom to the CBDT that you can also give some conditions. You may prescribe what they have prescribed. Beside these three conditions, they have given another list, like your gross risk. So every time the CBDT take the liberty to issue the notifications. So latest notification on these lines in this particular case of mandatory filing is 21st April 22, that is 37 bar 2022, where they have given another four conditions, another four cases where you have to file income tax return mandatorily. That is where the business receipts are more than 60 lakh rupee in the previous year, in the year, or the professional receipts are more than 10 lakh, or your TDS or TCS in the form 26AS. You can have a look at it, our form 26AS. If the TDS deducted from your income or TCS collected from your income is 25,000 rupees or more, or in your savings bank account. Remember, this is savings bank account, sir. Earlier slide, let me go back to the previous slide. Here, it was shown like the first condition, 1 crore in the current bank account, current account. But in the uh, notification, the CBDT has told, even in the savings account, they have made it a link. Like if you deposited either through the cash deposits or to the bank transfer, sir, there's nothing like mentioned here is like only cash deposits karke, not at all. Even the regular deposits also will be counted like transfers. You get some transfers, online transfers. Even those are also counted. Okay. If it is more than 50 lakhs, then also you are supposed to file mandatorily. So we have covered the cases where the mandatory filing is done. Mandatory filing has to be done like as per the Income Tax Act as well as the notification. And now we'll move ahead with the key changes in the ITR. So every year, so department always try to tighten the norms, like through the possible means, despite having got information across different sources, third party sources. Because if you look at ITR like AIS form or TIS form, so you get enormous data for the income tax department, right from say registration office, sub-register office. So they get the data from the say stock brokers. They get the data from the banks, right from say cooperative banks to the nationalized banks and private banks and the foreign banks. So each bank will upload the data of your savings bank account or current accounts, because you'll get the transmission of the savings bank interest you might have seen in the AAS and the TAS forms. So everywhere the department gets the data. Besides getting the data from different sources, even the department is interested to hear from you. As like we submit resume in the interview, but even if you submit the resume in the interview, the interviewer keep asking, "Alright, tell about yourself." Same is the case with the income tax department. So though they get entire information from different sources, but still it is interested to know it from your income tax return. So that is the reason why they keep changing the ITR form every year. And we have good number of changes in the recent ITRs. So that also we will try to understand one by one in detail so that we'll have forehand information like how to go ahead with filing of income tax return. So first uh, change that has come is expansion of the ITR 1 and 4 eligibility. Like as we already discussed, like ITR 1 earlier do not have the scope for capital gains. Scope for capital gains. If you have capital gains, you are mandatorily to go with the ITR 2 form or the next forms. But you cannot file it in the ITR 1. But now it got enabled. Like if your long-term capital gains is less than or equal to 1,25,000 rupees. Why 1,25,000 rupees? Because it is exempted. So up to 1,25,000 rupees on the listed shares, on the listed equity shares and mutual funds, it is exempted. So that is the reason why if you got exempted below say 1,25,000 limit, then you can opt ITR 1. So you get a doubt, sir, if my long-term capital gains are say 2 lakh, what happens? You don't have any option to go with ITR 1. You have to move with the ITR 2. And at the same time, sir, I don't have any gain. So recent market crash, I only have loss. What to do? Suggested to go for or mandated to go for ITR 2 because you can carry forward the loss through the ITR 2 form. And you cannot say that, sir, I'll ignore because my loss is only say 1,000, 1,500 rupees. Can I ignore? My dear friend, please do not ignore because it amounts to concealment. So concealment is again 271 1C penalty. So unnecessarily a huge liability. So don't ignore the last part as well. So only changing the ITR form. So you can go ahead with opting another new ITR. So coming to the next one is Aadhaar enrollment ID is invalid. So anyway, this is a very little change. So earlier, while filing the ITR forms, we have this Aadhaar enrollment ID also can be keyed in for in place of Aadhaar. But now everybody got Aadhaar, but so it's like they have removed this option. Like Aadhaar is mandatory. You cannot key in Aadhaar enrollment ID in place of Aadhaar. You should have Aadhaar on the ITR form. And coming to the next is opting out of the new tax regime. ITR 4, okay, a new HALA has come, like no, new regime, old regime. So every time we get a doubt, which regime we need to follow. So as you are aware, in the previous years, like when they started way back, say 3-4 years back, so new regime. So everybody of the tax professionals are of the view, like maybe the government is also interested to go ahead the making the people to habituate to only new regime. As in the overseas, we used to have whatever the income you receive, pay tax on it based on the slabs. No hala of claiming deductions like so many deductions are there like savings, like donations, X, Y, Z. So those things maybe in the future the government is willing to get rid of those deductions part. That is the reason why the new tax regime got introduced. So hope you recollect the case of gas subsidy. That's a perfect example what I used to share because in the beginning, no, they told so if you are interested to forego your subsidy, you can opt for it. So they started saying that, but nowadays, like the subsidy which we are getting it in the bank account is say few bucks, like 5 rupees, 10 rupees, and all getting credited. But anyway, that's a good thing. Coming to the new tax regime part, uh, earlier old tax regime was used to be the default option, but since last year, the new tax option is default. So if you wish to go to the old one, you have to file a form and go to old one. One time you can come back again. So from old one, you can come back again to the new one. Okay. So here in this particular year, this is the second year of making the new tax regime default. So here it is asking again to confirm it again. So it's only a reporting part. You have to confirm it again that have you filed the old 10IA form, or you wanted to continue? If you are in the old resume, it is asking whether you wanted to continue in the old resume. That's it. Because it is rechecking, sir. So there's nothing new in it. Only thing is, it is reconfirming from the client side. Reconfirming. So don't ignore this particular class, because I used to see from several ITRs, there's a confusion. Like last year, default option is new. Have you filed 10IA to go to the old form, old resume or not? You just check it. If you are in the old resume, you can continue to be there in the old resume. No issues. You need not file any form. If you wanted to come back to the new resume, then you have to file the form. If you are continuing the old resume, you can continue to be there in the old resume. No issues. Coming to the next part, the capital gains reporting rules. A critical date that you need to remember, that is the date on which our finance minister Nirmala Sitharaman has put the budget on the table of the parliament, Lok Sabha, like on 23rd July 24. This date you just have to remember, because the tax rates have gone changed. Tax rates on capital gains have undergone some change. Tax rates, like, for the other assets, like for example, immovable property or the unlisted shares and all, the tax rates have become better, because earlier it used to be the long-term capital gains tax rate used to be 20%, but now it is 12.5%. But for the long-term capital gains on listed shares, earlier it used to be 10%, but after 23rd July 24, it is like 12.5%, a bit increased. Earlier it was 10% for the long-term capital gains on sale of listed shares. Earlier it was 10%, now it was made 12.5%. So every time you key in the data, this particular date, you have to keep it in mind, which tax rate to be applied. Though the software, whichever you are using it, taking care of this particular part, but my friends, my dear friends, like, you also make sure recheck once again, because it's a common thing, a common sense thing. So better you recheck again whether the software is applying the tax rates properly or not, because that's the reason why they are approaching the professionals for filing their income tax return. So you have to recheck again the date part. Keep in mind this particular date. And going to the next slide, like, we have few more changes, like TDS sectional disclosures. Like it was there earlier as well, but now it is made mandatory. Like, you have to compulsorily select the section under which your TDS is being deducted, for sure. And then buyback proceeds is another thing which you can have a look at it. Buyback has a story that we'll try to take it to the last slide, because we have a last slide completely which takes care of the buyback proceeds. I just try to give 2 minutes overview of the buyback proceeds, because this topic is about the filing of the return of income, not about buyback proceeds taxation. So anyway, we'll try to throw some light on the buyback proceeds. And coming to the disability certificate for 80DD and 80U, again, as I told in the initial remarks, like earlier, the moment you key in the data, like 80DD, you must be aware, dependent with disability. If any of your family member, having the disability, like cerebral palsy, disability is different from disease, sir. Disability is more or like permanent. Disease is something curable. Disease is something curable. Disability is something more or less permanent. So if at all any of your family member have uh, disability 80DD, then you are supposed to obtain a certificate from registered medical practitioners from the government hospital, or if he is taking treatment at the private hospital, he should be a registered medical practitioner having requisite qualification. And 80U is self, you yourself, or the client himself is or herself is disabled, then the certificate details need to be fed. Earlier, just keying in the data that having permanent disability more than 80%, severe disability or normal disability, the form used to accept, but now it will not accept. you have to file a Form 10IA separately, other than this income tax return. Beforehand, you need to file this Form 10IA, which has details of doctor, where from you got certificate, and even as the chartered accountants have this concept of UDIN, unique document identification number. Even the doctors are also having this concept of document identification numbers. So you can check it on the certificate they issue. So there you can find the document identification number. That also you need to key in this particular ITR form. So as I told earlier, we used to enclose entire certificates. But the moment the online filing has come, we are not doing that. But now back to square one, like it is not asking at least to upload the form because the data limitation, the size limitations. Now it is asking you to feed in the entire information of certificate at least. Coming to the next one is asset reporting threshold, schedule AL, assets and liabilities is one thing. Assets and liabilities, like earlier it used to be 50 lakhs, but now they increased it to 1 crore. So little liberation. Okay. Coming to the next thing, a few more changes. Enhanced disclosure for HRA. My dear friends, you must be aware, like in the last say 10-15 years, so people started claiming the HRA exemption left and right, and and even the deductions. So you don't believe, like maybe you might have come across. Uh, I should not even name a particular industry as such, but I have to mention here on the platform. So few professionals who has the knowledge of filing the ITRs on their own, they started filing on their own. So they are not even approaching the tax professionals. That's an unfortunate thing. See, as we come across in the YouTube, in the news, people started operating on their own. YouTube doctors have come. Similarly, nowadays YouTube chartered accountants also have come. They by profession they are not chartered accountants or the professionals, but they started filing on their own their income tax return as if they do in the YouTube. No, by looking at the YouTube, they do operate on their own. No, like surgeries and all they do. Same way they started doing the income tax return. My dear friends, like you please advise your clientele. So this is also an expert activity which requires some expert knowledge. So they should not do it on their own. But anyway, we cannot stop them. So having every professional, like software professionals or other professionals started filing their own income tax returns, they started claiming so many uh, claims like 80DD, 80U. So whatever the sections, they read the section uh, and they put the amount, and automatically the ITR utility anyway will limits to some extent. They think whatever it is, we got some exemption. No, they are moving ahead. This unfortunate thing. So looking at these kind of practices being followed by the taxpayers, the department has come up with tightening the uh, forms by giving enhanced disclosures. Like you need to mention like the location where your office is there and where from you are traveling. So those things are being captured in the HRA disclosure part, so that we come across so many things like claiming HRA on their own house. Uh, to avoid those things, at least this enhanced disclosures have come, and even home loan disclosures like claiming deductions under section 24B and 80EE and 80EA. So these deductions are also like require the land means loan account number, date of sanction, those things to be given. And for ETC savings part, earlier just a keying in the data that is sufficient, but now that is not accepted. You have to even have policy numbers required. So you need to key in the data of the policy numbers and the claim amount. So unless and until you have policy on hand, you cannot take this particular deductions. And 80D is one more, like even you have to give the name of the insurance company. At least in 80C you don't have, but the 80D you have to give the insurance company details as well, policy number as well for claiming insurance, health insurance claim deduction. But these are all part of the old regime, my dear friends. Like it's not part of the new regime anyway. And as we already discussed about deductions for treatment of specified diseases, uh, 80 DDB is another deduction where your dependents are suffering from diseases. Earlier we spoke about disability, but this particular section deals about disease part. So if they're having few specified diseases, sir, so for fever they admitted, you are claiming bills, not allowed. For not this deduction is not for regular diseases. These are severe diseases like cancer or kidney related ailments or thalassemia. So these are the very severe diseases. To support, we have got a deduction here. And ATE, you might aware interest on education loan. So to support the people for education, like going for higher education, having taken the loan. So, but here again, more details to be keyed in, like uh, from where you have taken the loan, date of sanction, repayment during the year. Those details you need to enter. And besides, you have another deduction on electrical vehicle. This deduction I have passionate. Everybody started claiming it, but let me be clear here. So going by the section 80 EEB, that deduction is not for the new loans. That deduction is not for the new loans. This is for the past loans taken before 2023, sir. So before 2023, you could have taken and you started paying the interest. If at all the interest is still, if the loan is still live, if you are paying still interest, you can claim it as deduction by giving the details in the ITR form. You need to give all from where you have taken the loan, how much interest, like loan account number, date of sanction, those details you need to key in. Coming to the most important part of today's evening discussion, that is Schedule FA, and one more topic to come, that is Schedule AL. So this particular schedule is one thing like which is attracting this scrutiny, sir. So we should be more careful while giving this particular data, because now from so long we have been hearing the word like the universe has become a very small village, the global village. So people started investing globally. Even people who are working abroad, they're coming down and settling in India. So these two cases are possible chances for you to get this particular Schedule FA, foreign assets. So how do we report for whom it is applicable? So that we need to be very careful. So everybody, like those who are filing the return of income, who has the foreign assets, there is no limit here. For AL, for assets and liability disclosure, you have a limit actually. That is 100 lakhs gross total income. But for this particular schedule, FA, you don't have any limit as such. You are supposed to disclose these particular assets, even the income is say 5 lakhs or 10 lakh rupee. Your total income is 5 lakh, 10 lakhs also. You are supposed to disclose this particular information under Schedule FA. So now what to report? What to report in the Schedule FA? Here we have got a few line items. We'll come by line, item by item. Okay. The first one is foreign depository or custodial accounts. You get a doubt, what is foreign depository accounts? Foreign depository, it's look like, our depositories, CSDL and NSDL, not so. Here, depository means this depository is nothing but the bank accounts, regular bank accounts. If our client has got some foreign bank accounts, whatever the balances he has got in the foreign bank accounts, that has to be reported. Foreign bank accounts balances have to be reported in the Schedule FA. Sir, here we need to be very careful. One more catch here is this follows the calendar year, sir. This is one surprising element is it follows the calendar year. So our income tax return follows the concept of financial year. That's what previous year we call. For example, you are filing the return of income now means for which period you are filing? 24, 25. Commencing from say 1st April 24 to 31st March 2025. But this particular schedule is about the calendar year. Calendar year means 1st January 2024 to 31st December 24 only. You are missing the 3 months part. Don't worry. Don't bother. Next year you can give. Don't worry about missing part of the year of 3 months. You can give it in the next year. But it follows only calendar year, not financial year. Please, this is a big a point which we need to remember in mind. Like, it follows only calendar year. Okay. Now, whatever, see, it follows the calendar year, that's fine. But now you get a doubt. Sir, my client has closed his account in, say, November itself. November 2024, he has closed his account. Shall I report? The answer is yes, you need to report, because see here in the second point I have mentioned, it is third point. Assets held anytime during the year, sir. He might have during the year itself, he has purchased an asset, sold an asset, but you need not bother. You have to report the asset details. You have to report the asset details, because the ITR instruction says assets held any time during the year to be reported in the schedule FPA, foreign assets. You don't have any option. So there is nothing that, it has to exist as on 31st December 2024. Not so. Even it is sold during the year itself, but still you are supposed to report. Okay, now we'll come back. So what to report? Foreign depository accounts, those accounts which you have got in the foreign countries in the bank accounts. And what about the custodial accounts? There is a difference between depository accounts and custodial accounts. I'll just try to give you with a simple example. So depository accounts are those kind, like you got an account with SBI in India, or you got an account with, say, Canara Bank. So that is bank accounts. Then what about custodial accounts? This is not actually bank accounts. This is like, balance with the brokers. For example, Zerodha, you started investing in Zerodha. So there, some wallet, it's a kind of wallet, no? In Zerodha, you can deposit, say, 1 lakh and keep it in the Zerodha. You need not, Zerodha means stockbroking account, where you can purchase and sell securities. Okay. So you may have some balance with the Zerodha, or, some Motilal, or some, say, some stockbrokers. So those balance are also supposed to be declared in the schedule foreign assets. That you should not miss it. Okay. The second is foreign equities and stocks. You got some stocks across abroad. You got some foreign you have got some foreign stocks. So those stock details are also to be reported. You have got some interested in say, some firms, some INCs or LLCs overseas. So those stock details, those interest details, interest means what? Your investment part. So those details have to be reported. And you have got some foreign partnerships, those details to be entered. And virtual digital assets, VDA, you hold it outside India, those details are also to be declared. And the fifth part, if you see, assessee being a signing authority, this is another important thing which you need to understand. What is exactly this? Sir, for example, you are filing an income tax return of a CEO of an Indian company. Let us say CEO of an Indian company. But the CEO is also a signatory for a foreign company as well. For a foreign company in US, like in the foreign country, because he is the signing authority. He has got a authorization to sign the checks in the foreign country. It happens, no? It's a regular thing, because maybe he is given authorization to sign the checks of a foreign bank company, of the client company. Then what happens? That also need to be reported. But you get a doubt, sir, he doesn't have any interest, or he doesn't have any shares. He doesn't have any partnership in the particular entity. He is only just a signing authority. He doesn't have anything. He doesn't have any income as well. Then what should you do? Still, you are supposed to report. Still, you are supposed to report what kind of a signing authority, on what role he is signing it. So you can find the fields in the schedule FA. Those details are also supposed to be given. And besides these 5 items, you have got one more item, that is foreign source income. Foreign source income means, like, you got an income outside India that has to be reported in this particular schedule. You get a doubt, sir, reporting here itself is fine, or should I even offer for tax? Remember, my friends, the schedule FA is only for information, but the best part is you have to disclose it in the incomes as well as here in the schedule FA. It's not that only reporting in the foreign source income will serve the purpose, not at all. You have to even disclose the income. You have to offer for tax and then disclose here as well. Two activities you need to do. So only disclosing here will not absolve. You have to even disclose the income as well. Okay. Now coming to the other parts, like as we told, even if you do not have any income, for example, you got an asset, say in Dubai, you got a say flat, an apartment, and you are not having any income from the apartment. Your client has got some apartment, but he don't derive any income. Then what to do? Still, you are supposed to declare. So you need to take entire list, sir. Whatever the foreign assets are there from your client, make it a mandatory to ask for in the checklist, whatever you have got, to ask for this particular information. And as I already told you, it's only calendar year, not financial year. And it applicable to HUF as well. Please remember. And wherever required, the conversion rates, because everywhere we need to report only cost. Even the ITR instructions are also says you need to take only cost at which you acquired the particular asset. But sometimes, like you may not be able to find the cost. Then what to do? You can consider SBI TT rate. My dear friends, like you don't find SBI TT rate, what to do? Keep aside. You report something like because convert based on the rate available in the market as on that particular date. Because non-disclosure will lead to more complications than disclosing some little incorrect information, because it may vary, say 2 to 3% only. But if you fail to disclose, it leads to another complication, that is concealment. Concealment is one thing which we should not touch upon. Okay. So hope I am clear about this particular schedule for assets. I'll move ahead with the next slide. Another important slide, that is schedule AL, that is assets and liabilities. So schedule assets and liabilities, again here one doubt you get, sir, for a resident individual, he might have got foreign assets as well as this particular schedule. Where should I report? Where should I report? My friends, you have to report at two places. At the both places you need to report. Sir, I reported in say schedule FA. So I will report the other assets, whatever there in the India, that you will report in schedule AL. The answer is no. You need to report even schedule AL also, because the ITR instructions are of that size, of that kind. Because you will not be absolved by reporting in FA. You need to also report for a resident individual. You need to even report in AL as well. Assets and liabilities as well, you need to report. If at all your income is more than 100 lakh. Okay. Now, what to report here? Here you need to report, as you are aware, like immovable properties. Once again, my dear friends, I'm reiterating all the items we need to report at cost price only. Don't take it to the market price. You will not be appreciated for taking the market values. The client may say, sir, report it market values because I wanted more loan. Don't do that. It will unnecessarily lead to another complications. Don't make them end up at another complications. Only disclose it cost. Okay. Coming to the schedule AL, it is a bit different. Schedule FA is about calendar year, sir. Calendar year, schedule FA is about calendar year. That too, anytime during the year, you might have sold the asset, but still you are supposed to declare in the foreign asset schedule. But schedule AL is a bit different. It's our Indian style. If you have assets and liabilities as on 31st March, of the previous year, then only you report. If you don't have, please ignore. Sir, purchased and sold during the year itself, ignore. Sir, purchased, like taken loan during the year and repaid the loan during the year itself, don't consider. Please ignore. Okay. So now this particular data is only for 31st March only, sir. And for a resident individual, again, global assets have to be reported. As I told you earlier, sir, I have declared only foreign assets in, say, FA schedule. Should I continue to report in Schedule AL? The answer is yes, you need to report. Global assets need to be declared, disclosed in the particular AL. Okay. And next, we'll move on to the next slide, that is about common mistakes. We have already discussed these common mistakes, but anyway, let me take you through the common mistakes once again, because the purpose for which we assembled here is this particular part majorly. Besides, for the recent changes, common mistakes normally we do is ignoring Form 26As or AS. My version of this particular statement is even considering 26As and AS is also like a mistake. In the initial remarks, I told you, when a client has delayed in giving some information, what will you do? Our people, our teams, like started, going by the Form 26As and AS. My dear friends, don't do that. Don't do that. So don't consider AIS, TIS, or 26As as final. Don't conclude. Don't take it for granted. Always get it confirmed, get it rechecked once again from the bank statement. Okay, because certain times certain data gets duplicated. Maybe you might have come across already, but let me tell you with experience, like certain data gets duplicated because I've seen few notices where they purchased only one property for say 2 crores, but in the AS it was reported like 2 crores and another 2 crores are also reported two times, that is 4 crores. So what should I consider? The answer is only 2 crores because I need to recheck with the client. Sir, it is reported like 2 times. What should we do? You have an option like compliance. You have an option of compliance in the compliance portal of income tax, where you can get in, log in, and report it as it does not belong to assessee. That you need to take care of. So while filing the return of income, it's not about just taking the OTP and filing the income tax return. My dear friends, please remember, while filing the return of income, you need to completely have the information and knowledge of the client activity. So you need to reconfirm each activity. Sir, you have got say 1 crore of share transactions. Is it so? He has given some say stockbroking statement wherein you found only 50 lakhs. What should we do? Should we go with the 50 lakhs stock broking turnover based on the client statement or 1 crore as reported in the AS? Which one should we consider? Neither of the thing. We need to again re-ask the client. Sir, 50 lakhs is only you have given, but in the AIS, 1 crore is disclosed. Is there any additional stock broking statement available? Please reconfirm. If the client says he only have one stock broking statement, then this AIS is incorrect. You need to report to the compliance portal that the information is incorrect. Rectify karke. So you cannot keep the things open-ended. My dear friends, my dear professionals, like you should not keep the things open-ended. Please try to fix it as much as possible because client has reconfirmed his transactions are only 50 lakhs. Here in the AS it is showing 1 crore. So you need to square off the 50 lakhs balance. Better do that. In say 26 AS, certain transactions are not reflected. Then what to do? You should inform the client for rectification. Or certain transactions are reflected more than what is supposed to be declared. Then again, we need to inform the client to get it rectified from his customer side or vendor side. So this is a kind of double mistake, a double-ended sword. Ignoring 26 AS is also a mistake, or AS is a mistake. At the same time, going only by 26 AS and AS is also a mistake. So we should be there in between to validate which has to be considered, which is not supposed to be considered. Coming to the next part, missing bank details, it happens. So those dormant accounts, maybe you can ignore, but try to collect all the bank accounts which the client has got. Because once you go through the bank accounts, you will get to know what kind of transactions he has entered during this year, because he does the transactions without your consent. But at the end of the year, you are the one who are supposed to consolidate and analyze. You have to do your own data analytics to make him understand which is supposed to declare in the income tax, which becomes part of the income tax return, which do not forms part of the income tax return. The third thing is unsubstantiated deductions. This one worry each professional is facing now. Unsubstantiated deductions means what? He is into a say old tax regime and has been claiming so many exemptions or deductions without any supporting evidence. You always make sure collect the all the deduction support. Client may say, client is very well known to you, my dear friends. Today he may be a friend of you, oh, close friend of you. So going by the call, like he says, I invested say 1 lakh in say life insurance premium, you claim it. So you going by the confidence you got on the client, you feed in the data 1 lakh and he has given some policy number and you took the policy number and fed it and went ahead. And on the day two, like in the future, 1 or 2 years later, he got a notice that produce the proofs for these particular deductions. Then you don't find the particular proof. Then what happens? Let me tell you, like client will definitely put a finger on you because he says that day I told you all the information, that day I have shared entire information as well. But the answer is no, we'll be clueless what to do because we only filed the return of income. No. So unnecessarily we will end up in soup. So to safeguard, make sure even nowadays income tax department started, visiting the clients like CSR, visiting these chartered accountant offices and even tax consultants offices to check whether our people are collecting the valid information or not. Maybe you might have come across this news in the last 2-3 months back. Everywhere in Andhra Pradesh and Telangana, or across Karnataka as well, like few raids have been conducted. Like department people started, visiting the local tax consultants offices, whether you people have collected or not. You get a doubt, sir, where will we catch hold? They cannot catch hold. One small thing, sir, you can check the particular acknowledgement form. You will find the IP address from which location the income tax return is filed. Through the location also, they can definitely find you where from this particular income tax return is filed. Don't take it for granted. I will not be catch hold. There's a popular saying, when cat is taking the milk, it thinks that nobody is watching us. But let me tell you, everybody is watching you. Okay. Next is mismatch in the interest income. Yes, because when a straight form 16 comes to you, they get some interest from say savings bank account. So that particular income will not match with the he will not file it in the income tax return. That's another small issue which everybody is facing. So you need to make the client convinced about the interest income because the form 16 do not contain these details of interest income because he will not report to the employer. Then what happens? He started, concealing this particular interest income. So don't do that. As much as possible, try to make the client understand this is one thing which they should not miss it. Wrong ITR form we discussed already. Like certain right ITR is also a challenging task. And incomplete foreign asset data. So make sure your template or your checklist of seeking the data from the client also has this particular clause foreign assets because let the client on his own confirms that the foreign assets he has got or he do not have any foreign assets. Let him be verified. And the last part, very funny part of the income tax return filing process, not e-verifying the return. The moment the client, our people file the return of income, it gets filed and it gets missed because maybe our people have tried to contact the client, but at that time client did not respond. What happens? Next minute, you will move on to the next client. Then you will miss the filing, like e-verifying the return. So because now the time limit is only 30 days. 30 days. So after crossing 30 days, it gets into the next bucket of belated returns here. It gets in the bucket of belated return. You cannot have original return. Again, it becomes belated return. So make sure have a procedure at office or on your own. Like don't miss out on e-verifying the return of income. Okay, so these are the common mistakes that we do while filing the return of income that we need to keep it in mind. So while filing the return of income, we'll try to push it off. One more important thing: tax audit report. The major changes recent past. The few changes have come. Few clauses have got amended, and few clauses got omitted certain things. But yes, let me take you through the particular changes. Class-wise comparison I will try to do. So if you're, as I told you, the session is for the beginners as well as for the experts. Like maybe if at all you have seen the earlier tax audit report, you get some knowledge of what we have been discussing now, what we will be discussing now. But anyway, let me take you through. Class 12, I will also like try to give a, a simple background of the particular reason. So insertion of section 44 BBC. So like BBC as a news channel, you can remember the global news channel. So this particular insertion of section 44 BBC is about the presumptive taxation. This class 12 is about presumptive taxation. If the assessee has got presumptive income of 44 AD, 44 AD, A, 44 AE, 44B, 44 BB, 44 BBC. So these sections. So this 44 BBC is about a non-resident person having shipping business in India. Actually, 44B covers shipping business. Then what about the 44 BBC? The 44 BBC is about cruise business. Cruise business means what? Passenger travel. So to encourage non-residents, means foreigners to start or to commence business in the country, business in India of the cruise operations, like from one port to another port, like movement of passengers. We have 44B section for transporting of goods, but now the section 44 BBC talks about transporting of passengers. Okay, so as the new section got introduced in the Income Tax Act through last Finance Act, so now a reporting subsequently corresponding reporting also like required in the tax audit report. Hence, this insertion happened. Okay, 44 BBC reporting like those non-residents having cruise business. Okay, next class 19. Omission of certain deductions like 32 AC, 32 AD, 35 AC, and 35 CCB. These are all sunset clauses. Sunset clauses. You get a doubt. What is sunset clause? Sunset clause is about already those deductions have lapsed for so many years because those were not there. Those deductions are not being allowed to claim by the assessee. Then when the client itself is not, assessee itself is not allowed to claim the deductions, what's the fun of having it in the tax audit report? So that's why they omitted in class 19 these particular deductions. And then class 21, this is like very funny thing, like if a assessee has involved in a non-violation of any statute in the country. For example, you incurred some expenditure for violation of some statutory legislation. For example, let me explain this. For example, you violated traffic norms. What happens? Any company assessee, client, maybe some director or CEO has got a car. He has violated the norms of traffic, maybe overspeed. Then he landed at paying some 1,000 rupees fine. The 1,000 rupees, what happens? He has debited it to the P&L account. So if the expenditure gets allowed, what does it mean? So Income Tax Act is allowing expenditure. Income Tax Act is allowing expenditure incurred for violation of another act in the country. Why that particular 1,000 rupees is paid? Because he has violated another law in the country. So he has paid that penalty. But that expenditure is being allowed by Income Tax Act, another law in the country. That is not supposed to happen. So that is the reason why class 21 is introduced. Class 21 has got the provision of, if at all an expenditure is debited in the P&L account, which is because of regulatory violations. Regulatory violations, if at all debited, that has to be disallowed. And you, chartered accountant who are doing the tax audit, are supposed to report it in the income tax audit report. For example, one more. For example, criminal proceedings. If a client has some criminal proceedings against his client, the assessee against his client, he has got some case, and the court has decided like some penalty has to be paid by the assessee. He has paid that penalty, but got debited in the P&L account. Because why he has paid the penalty? Because he has violated the regulatory requirement that should not be allowed as deductions. Next, class 22, hope you are aware, 43B H. This is in line with the MSME Act, Micro, Medium and Small Enterprises Development Act 2006. In line with the, if you do not pay the dues payable to any micro, medium, small enterprises within the due date, if you got an agreement, then 45 days. If you don't have an agreement with the MSME, then within 15 days you are supposed to clear the dues. If not, then that is supposed to be disallowed as per the Income Tax Act 43B clause H. So that's the reason why this reporting has come. And coming to the class 31, changes in the loans and deposit, like this is about 269 SS and 269 ST and 269 T. That is cash related changes. So if you accept any deposit or loan in cash, or if you repay any loan or no deposit in cash exceeding 20,000 rupees, that gets disallowed. So that is part of this particular class 31. And any receipts you should not get more than 2 lakhs. That's also a violation. So class 31 covers those things. And coming to the last one, like class 36B about buyback of shares. In the recent past, this is one thing that everybody are interested, buyback of shares, because every company now the recent days started uh, purchasing their own shares from the market, purchasing their own shares from the market from the shareholders. So it's more of reducing the share capital, reducing the burden on the liability side of the company. Then what happens? Why this particular uh, change? So that we just have a 1 minute view of the entire buyback of shares. So if you want me to take you through the buyback of shares, the story has the link to the year 2013. So in 2013, so the buyback of shares, like actually it is you remember dividend distribution tax was there. So dividend distribution tax was actually abolished. Then what does it mean? Earlier, if the company is distributing dividend, a company is distributing dividend, the company is supposed to pay the tax. As the company is paying tax, it is not taxed in the hands of a recipient, that is shareholder. It is not taxing in the hands of shareholder. Subsequently, what happened? The government of India, like they have abolished DDO, dividend distribution tax. They have abolished. So companies is not required to pay any dividend distribution tax. Then who is supposed to pay? Then it started taxing in the hands of investor, like shareholder. Shareholder is supposed to pay tax on the dividend. That shift has happened. Now, same things, buyback of shares. Buyback of shares means when the company has, as per the Companies Act, when the company has got enough profits, instead of giving it as dividends, what it is trying to do, instead of giving it as dividend, it is buying back the shares. Like it's more or less distributing the dividend. It's more or less distributing the dividend. So now a new section got introduced in the Income Tax Act in line with the abolition of the dividend distribution tax. Section 222F got introduced. Section 222F. Like if the buyback of shares happens, it has to be, if a buyback of shares happens, it has to be taxed in the hands of assessee only, the investor only. Okay. Now, similarly, what happens to the like at what price they have to pay? Earlier, when the buyback happens and it is taxed in the hands of the company, what happens is the company at least gets a deduction on the issue price. Company has got deduction for the issue price, but now the investor will not be eligible to claim any deduction towards the acquisition price. For example, the SSC has purchased, say, 4 years back, say for rupees 50 rupees, and now he has got 650 rupees as buyback consideration. He has purchased a share for 50 rupees, and he has now got 650 as buyback consideration. What should be taxed? Is it 650 minus 50 or straight away 650? The Income Tax Act section 222F says it is straight away 650. 650 is supposed to be taxed, not 650 minus 50, 600. No, 650 to be taxed. And now what happens to the balance 50? Because he has incurred the expenditure. No, the 50 is about he has incurred to purchase the share. That is the cost of acquisition for the share. For the cost of acquisition, what is the sale consideration? The Income Tax Act says sale consideration is not there, it is zero. So you have to consider whatever the purchase price is there, that you need to take it as loss only. That is loss. So consideration is zero. So what the Income Tax Act says is the consideration is, see here if you see, consideration is zero and cost of acquisition is whatever the cost you have incurred. Then what happens? It results in loss. So that particular loss you can adjust against the future years. That is allowed. But whatever the sum received by you as consideration for the buyback, it is supposed to be taxed under section 222F. Gross consideration has to be taxed under 222F, and that too in the income from other sources. Income from other sources, because it's not capital gains. In the capital gains, you will have loss. So no deduction for the expenses is allowed under section 222F. Don't consider that cost of acquisition, sir. And again, 115 QA earlier, company is supposed to pay tax on the buyback of shares. On the buyback of shares, earlier company is supposed to pay tax, but now that got demolished. Like it is sunset date is introduced, so no taxes shall be paid by the company on the buyback of shares. Okay, and anyway, company does the TDS when they make the payment. So now with this, I completed my tax side, but one more small thing: ITRU, last option to file the income tax return. Last option to file the income tax return. That is, no, earlier it used to be 2 years, but now they got extended. No, more compliances started coming from the assessee side. So they extended it for 48 months from the end of the relevant assessment year. So once you miss the filing of income tax return of any year, even belated return is also like missed, then you have this wonderful option of ITRU. So at least you can come out from the concept of what I say concealment. At least you can declare by paying some tax. But here it's like penalizing provision. So if you are able to file within 12 months, then 25% additional tax you are supposed to pay. If you are paying like filing in 24 months, like 2 years time, 50% supposed to pay. 50% additional tax, sir. You are supposed to pay the tax, and besides you are supposed to pay 50% of, if you are supposed to pay say 1 lakh, you have to pay 1 lakh plus 50,000 additionally. 1 lakh 50. Okay. And 36 months, 60%, 48 months, 70% you are supposed to pay. And let me be clear, like a refund case, anyway, you cannot file ITR. You only tax payable. So if you are coming and contributing to the country's development, then only you are allowed to file ITRU. If you are denting the economy, you are not supposed to file ITRU. So you have to make sure file before original return due date or belated return due date. you cannot come for the ITRU if you are not able to pay or if you are not able to contribute to the development of the country. Okay. And yes, come to the last slide of my presentation. Like, file early, avoid errors. Like, one thing I just wanted to share with you, like about the extension of due dates. So, though I am on a different platform, so but still being a member of the profession like ICAI. So earlier we used to have one president like who used to say whenever there is a due date coming short, no, like approach due date is approaching, our offices are loaded with enormous pressure. So then every member used to approach the institute, like asking, like request the Ministry of Finance for extension of due date. So, but in the recent past, our institute has taken a bold decision of, we will not go and ask the Ministry of Finance about the extension because it's not our mistake. It is the industry which has to ask for it. So don't take the pressure of, onto the heads. So try to collect the data as much as possible, as early as possible. It's on the heads of the SSCs because it's their complaints. It's not your complaints. But of course, you're getting the fees, but don't take it much to the brain because so many heart attacks we have been witnessing in the last few years due to the pressures that being taken by the chartered accountants and the tax consultants. Don't worry much about that. So file early, avoid the errors. At the same time, because this is one thing which we need to keep it in mind. So filing early should not result in errors always. Okay. Coming to the AS and TS, one more reminder, like just don't go by AS and TS. Always remember to cross check it or verify it or validate it with the client data and keep documentation ready. Without documentation, without substantiating the deduction or anything, don't key in the figures. Have some logical reasoning if you are trying to key in any figure which you are not aware. Fine. So with this, we will move on to the question and answer sessions. Yes, coming to the ESOPs part, we need to put it in the FA part. Schedule fixed like foreign assets. You are supposed to report ESOPs, but only thing is on the vesting date we need to consider on the vesting date. Okay. So unless and until those ESOPs are vested, you are not supposed to declare as foreign assets. Okay. And foreign source of income, yes. If you got some income, then only you have to report. If sell the something, like you need to report, otherwise you can ignore. And yes, good evening. To the light on the relief that can give us put accrued income by retirement accounts here by the students. So software company performs a comparative analysis of tax liability on long-term capital gains computed under two methods, with indexation. Yes, without indexation, 10%. Let me tell you, like after say 23rd July 24, you don't have the option of indexation for the shares part. So you have to have only without indexation, that too at 12.5%. You don't have this option of with indexation or without indexation. Only prior to say 23rd July 24, you have this option. So if at all they do before 23rd July, then it's fine. And it's your choice. Always choosing the option. If at all you have the long-term capital gains on shares before 23rd July, that particular date we spoke about, then you have the option. So you need not worry. You can choose the option of with indexation or without indexation. Yes, historical values to be shown. For a movable property also you have the option. No? For a immovable property, even now you have option. My dear friend, like Saujana, you have now, even now option is there. You can consider with indexation 20%, without indexation 12.5%. Normally in say lands and all, you have better edge by taking 12.5%. For buildings and all, with our experience, we used to see like 20% is working out, but the only land is there, no? There 12.5 is working out. So, but you have the option of with indexation or without indexation in immovable properties. But in shares, anyway, you don't have. HCA rebate is there for special rate incomes as well, like entire tax liability that you can consider. So gross total income is having the income. So the rebate is about on the taxable total income. that you can claim.
So I would like to thank you so much, sir, for your delivering such an insightful and practical session on income tax returns, forms, filings, and compliance. With this year's ITRs involving more detailed disclosures, additional compliances checks, and changes in reporting formats, your session has come at a time when such clarity is more needed. So your lucid explanations, illustration, and deep understanding of the return forms, disclosure nuisances, and compliance timelines have certainly equipped all participants to better navigate in current filing season. So on behalf of the Hyderabad Chartered Accountants Society and all attendees present today, we sincerely thank you for your time and contribution.
Thank you,
I also
Ashish.
thank
Thank you,
all the
HCAS.
participants for joining us today and actively engaging in the session. So wishing everyone a smooth, compliant, and successful ITR season ahead.
There is a mismatch in AIS that it is duplicated. The data is duplicated. In that case, I have given a feedback like this is duplicated only. What's the procedure while filing? It is still showing as the error while filing of the return that have not considered some income.
Madam, see, whenever you in the reporting portal, complaints portal, you report it as duplicate or it does not belong to the assessee or it belongs to another assessee, then what happens is it goes back to the source. It goes
Yes.
back to the source. Means what? Those whoever reported the transaction, that goes back to them, and then again they have to reconfirm. So till such time that is open only. You need not wait till you get the confirmation, because I could see 2 years back for a client we have given that compliance in the compliance portal. A week back that has come, like source has denied the uh, information. But after 2 years, if they respond, we need not wait till such time. Only thing is, you go ahead with the actual data. But only thing is, you reconfirm again, is it actually a duplicate data or not? If it is truly a duplicate data, you can ignore it and go ahead filing the return of income, because it's not as I told you in my presentation, my session, like this is not a confirmatory statement of all the compliances. It's only a reference purpose.
Yes.
Fine.
We will not receive any defective notices for these kind of things.
No, we will not receive.
It's
For
that
sure, we will not receive.
Okay.
That is
Okay.
taken care only in the assessment side. Once you go ahead with the assessments, there we'll get to know the queries.
Why I have
Defective-
asked this last time when there is a mismatch between gross salary in the AIS and the Form 16 data, we have received some defective notice. Please correct the information if that is wrong like that.
Yeah, you
They
may
have made it
got
defective.
you got confirmation to confirm. What happened is the department has started sending the defective notices to reconfirm.
Okay.
So once you reconfirm, what happens is department will go ahead as per their wish, and 143(1)(a) gets issued. 143(1)(a) is nothing but it's not defective. It's like an assessment order. Again, on the
Okay.
assessment order, you are supposed to go for appeal or rectification. Again, two options are there. They will not make the return as invalid for sure.
Okay.
Maybe you might have not, like the case might have not been responded, and then it may become defective. But if you have responded saying that whatever we filed is correct, karke, you have reconfirmed, then what happens is department will go ahead with the assessment. They will issue
Okay.
143(1)(a), on which you are supposed to go for appeal.
Okay. Thank you.
Am I clear?
Yeah.
Sir, good evening, sir.
Yes.
Sir, I have a doubt. I have a doubt regarding to the rebate, sir. Whether the rebate is only allowed for normal incomes or the rebate is allowed for also special rate of incomes.
It is for the SSC for the gross total income. If it includes like even special rate income, it is allowed.
So, for
Means-
example, if an assessee have an income of around of more than 7 lakhs, including that capital gains, that assessee he can get a rebate or not? Whether he can rebate or not?
If the gross total income is more than 7 lakhs, the
Including
rebate
capital gains, sir.
Sorry.
Including capital gains, he have more than 7 lakhs
See,
of income.
rebate is on the tax payable.
Okay,
It will
sir.
not consider whether it has any income or not, except that lottery income. So if you have the other normal incomes, including capital gains, from the tax amount, you get the rebate, not from the income wise.
Okay. Okay, sir.
Rebate comes at the last part, whatever the tax payable. If it is within the rebate limits, you get the deduction.
Okay, sir. Thank you, sir.
Oh. So that's what I am trying to explain, sir. In 26 AS or in AAS, if you are getting the sale of property twice, please ignore the repeated transaction and go ahead filing the written off income. If it is say sale, you consider like capital gain schedule. You do your computation and file. So you can happily ignore that one. And in the compliance portal, in the AAS, if you are able to report it as duplicate, please do that. If you are not able to do that, don't worry, because basically what happens is post this exercise of filing of written off incomes, INCI section of the income tax department starts this analysis part. INCI, okay, intelligence wing of the income tax department. Investigation is separate, intelligence is separate. Intelligence wing will do the analysis. And if at all they have got a query, they will issue a notice and you can explain them this is duplicate. They're straight away squaring it off. You need not worry about the duplicate one. But only thing is you reconfirm, is it for the same transaction or not? What happens is, once again, maybe it takes time, but let me explain. In the case of say land development cases, this is happening. It is another type of mistake is happening. For example, in land development, joint development cases, JDA cases, for example, Sudhakar and Ashish has given land. Sudhakar is developer. 10 flats we have constructed. 5 flats of mine, 5 flats for Ashish. What happens? Being a builder, I sell my 5 flats. Ashish has not sold his 5 flats. In Ashish's case, what is happening is, as a landowner, because in the sale deed, what happens? On behalf of Ashish, I will only sign. If at all you see the agreement, sale deed, which I do to my customers, Sudhakar's customers, what I will do is, on behalf of Ashish, I am signing karke, I will do the registration. So automatically, the registration department, sub-registrar office, is uploading Ashish PAN also in the AIS. So what happens in Ashish's case? 5 properties are sold karke, it is declaring. So 5 into say 1.5 crores, 7.5 crores gets disclosed or declared in the AIS of Ashish. But only thing is, we need to reconfirm. Better you take the sale deeds from the builder, because I am a builder. No, Ashish is not a builder; he is a landowner. But don't just like that ignore the transaction. Do one thing. Report it as it does not pertain to me. It pertains to Sudhakar karke. You need to take it in the complaints portal. Besides having taken that caution, you also take the sale deeds from Sudhakar, because Sudhakar is there now. Tomorrow we are not sure. Day after tomorrow we are not sure. Those sale deed transactions, you collect the sale deeds and keep it with Ashish. In future, some scrutiny comes, he has to substantiate that those transactions appearing in a particular year do not belong to me, because builder has sold his own share of flats. Am I clear, sir? So we get so much of bunch of transactions of this kind. Fine. Fine. One more question: can we avail both HRA and home loan deductions when we are giving the property on rent? Yes, this is common query. HRA, where you are staying. Let me explain a case. For example, maybe in Hyderabad, I can give an example, but outside, I may not be take a reference. For example, your office is in say high-tech city. Your own property is in say Patancheru, so a bit far. That is own house in Patancheru, own house. There, you are saying you are self-occupied. Yes, allowed. Second, in high-tech city, you took some property on rent. You are paying rent in high-tech city. That is allowed. In the same city, you can claim HRA. You can also claim house rent reduction. That is possible. But on the same property, not possible. On the same property, not possible, sir. Because your wife is having the property and you say, like, wife has given me on rent, so I am staying in her house. One side you are claiming self-occupied, other side you are claiming HRA exemption. Not at all allowed. Okay. Yeah, Suresh Babu Garu like clarified. So the movable property transaction gets reported from sub-registrar office, and maybe the other transaction might have reported from the person who funded the transaction, like banker. That could be possible, but to clarify, Suresh Garu, like it is getting reported twice every time, even if it is not funded. It is happening in the regular cases, like as I explained, no, like builder, landowner cases. That's also been happening. But whatever you told is correct. We 2 times reported in 2 different categories, not in the same category. That's also possible.
So, considering, I think we have addressed all the queries of the attendees. And it was actually a very insightful session, Sudhakar sir. It was quite interesting and very insightful session for all the attendees. And I think everybody has gained something for this tax season, to face this tax season, and so that they can answer all the clients appropriately and get the required information before filing other returns. So I think with this session, we can attend the session now. Thank you all the attendees, and thank you, our speaker sir, Sudhakara Reddy sir, for the insightful session.
Thank you, Ashish, for hosting the show, and thank you, Suresh, for attending the session. And yes, thank you all the participants for bearing me for almost 2.5 hours. And yes, all the best for the coming tax filing season. Thank you.